could you explain to us how an individual investor can use those limits to do their own financial planning for their personal cash, because you are talking about investments?
Yes. Yeah, when we're coming up with these guidelines, we looked at each investment vehicle, and we looked at the risk of each investment vehicle and the returns. And also looked at why should you invest everything in one vehicle, such that if you can lose, you lose everything. So there was a need to put a limit so that you don't exceed that limit, so that the schemes and even an individual, when you're investing, don't put everything in one basket. It's always good to diversify. So, and then we're also looking at, like for instance, cash. Why should you have all your money in cash? So what we was proposed, and I can look at the guidelines, cash, we say just retain 5% of the cash, just what you need. That's what you can have in your account, cash, 5%. Because the rest you are going to put them on near cash investments, which are there, so you don't have to have it as cash. So the cash, as per the guidelines, is 5%. And then we have fixed deposits, things like cash on deposits that you can put in the bank, so that when you have extra money, you put it on deposit, fixed deposit, or even treasury bills. But normal fixed deposit, we say it should be not more than 30%, should go into fixed deposit. So it's also near cash, because you can call it cash on call, you can call it at any time. So the cash itself, 5%. Anything near cash, which you can call immediately, should not exceed 30%. Then we had corporate bonds. We also put a figure of 20% for corporate bonds. Government security, we allowed up to 90%, so that you can buy treasury bills and bonds. So it means that because we look at it in terms of security, we find it's more secure than the deposits. People have lost money in banks and the rest when they put their money there and deposit, but at least in government security so far, people have never lost money, although it doesn't mean that it's 100% that you can, it's best, because even government can become broke, but normally it's a last.
The risk is low on government
so that's why
bonds.
we put 90%. Then on securities, we allowed up to 70%, so that when you go to NSC, quoted shares about 90%, because it's quoted and it can also be sold. Anytime you find you want to sell, you sell. When the price go up, you sell. So that one we allowed up to 70%. And then we have unlisted sort of unquoted shares, which was about 5%. We didn't put so much on it.